Warren Buffett is widely considered one of the most successful investors in history. His investment philosophy is simple yet effective, and has helped him amass a fortune estimated to be around $100 billion. Buffett's approach to investing is grounded in a set of core principles that guide his decision-making process. In this article, we will explore 20 of these principles and examine how they have contributed to his success. 1. Invest in what you know. Buffett has always stressed the importance of investing in companies that you understand. This means sticking to industries and businesses that you are familiar with and have a good grasp of their operations. 2. Focus on the long term. Buffett is known for his long-term approach to investing. He believes in holding on to quality companies for a long period of time, and has often said that his favorite holding period is forever. 3. Buy companies with a competitive advantage. Buffett has always looked for companies with a moat, a competitive advantage that makes it difficult for other companies to enter the market and compete. 4. Invest in companies with strong management. Buffett has often said that he invests in people, not just companies. He looks for companies with strong, honest and competent management teams. 5. Look for companies with a proven track record. Buffett prefers companies with a history of consistent earnings growth and stable cash flows. 6. Invest in companies with a strong brand. Buffett has long been a believer in the power of brands. He looks for companies with strong brands that can command premium prices. 7. Focus on the value of the company. Buffett is a value investor, which means he looks for companies that are undervalued by the market. He focuses on the intrinsic value of a company rather than its current stock price. 8. Diversify your portfolio. Buffett is a strong believer in diversification. He spreads his investments across a range of companies and industries to minimize risk. 9. Don't try to time the market. Buffett has always cautioned against trying to time the market. He believes that it is impossible to predict short-term movements in the stock market. 10. Invest in companies with a strong economic moat. Buffett looks for companies with a strong economic moat, a competitive advantage that makes it difficult for competitors to enter the market and compete. 11. Avoid companies with a lot of debt. Buffett is cautious about investing in companies with high levels of debt. He prefers companies with low debt-to-equity ratios. 12. Invest in companies with predictable earnings. Buffett prefers companies with predictable earnings and stable cash flows. This helps him to forecast the future earnings of a company with greater accuracy. 13. Look for companies with a high return on equity. Buffett looks for companies with a high return on equity, a measure of how much profit a company generates with the money shareholders have invested. 14. Invest in companies with a strong competitive position. Buffett looks for companies with a strong competitive position in their respective markets. This allows them to generate high profits and maintain their market share. 15. Don't invest in fads or trends. Buffett has always cautioned against investing in fads or trends. He believes that these companies are often overvalued and do not have a sustainable competitive advantage. 16. Be patient. Buffett is a patient investor. He believes in waiting for the right opportunities to come along rather than trying to force investments. 17. Invest in companies with a low price-to-earnings ratio. Buffett looks for companies with a low price-to-earnings ratio. This means that the stock is undervalued and has room to grow. 18. Invest in companies with a high-quality management team. Buffett believes that the quality of the management team is critical to the success of a company. He looks for companies with strong and honest leaders. 19. Stick to your investment strategy. Buffett has always emphasized the importance of sticking to your investment strategy, even when the market is volatile or when others are making different investment decisions. 20. Keep learning and adapting. Lastly, Buffett believes in the importance of continuous learning and adapting to changing market conditions. He is always seeking to improve his knowledge and expertise in order to make better investment decisions. In conclusion, Warren Buffett's investment principles have helped him become one of the most successful investors of all time. His approach emphasizes the importance of investing in what you know, focusing on the long term, buying companies with a competitive advantage, and investing in strong management teams. He also believes in diversification, avoiding debt, and being patient with your investments. By following these principles and constantly learning and adapting, investors can increase their chances of achieving long-term success in the stock market.